Hello everyone, my name is Richard Moglen and welcome back to the TraderLion channel. Today I'm here with Ross Haber. We're going to be walking through both the fundamentals and technicals of CrowdStrike Holdings, one of our 2020 model book stocks. And if you do enjoy this video, please go ahead and leave a like down below and subscribe if you are new, and make sure to download your free copy of our 2020 model book PDF. Ross, welcome back to the channel, and why don't you go ahead and start with the fundamentals of CrowdStrike.
Okay, let's take a quick look at the larger picture here. We're always looking for the strongest stocks in the strongest group. Crowd was a clear leader in its group, which was computer security software within the software sector. The sector in and of itself was on fire. It's, the larger sector was actually on fire, and this just happened to be one of the stronger groups. Crowd is probably the, one of the top, is the leader, if not, the top couple leaders in the group. So that's why we start there. Stocks, industry group, and sector are about 50% directly related to its move. So having that breeze at your back is very helpful. Remember, we start with the larger market. We know that we're in an uptrend. So after that, we want to know that we have the sector and industry group at our back. Just those two things in and of itself really makes life easy. So anyway, moving on to Crowd specifically, we're going to just drop down here where we have their quarter over quarter earnings and revenues. Starting with their revenues, you can see we've got quarter over quarter earnings growing at a triple-digit pace for 4 quarters. We saw a solid acceleration over the last 3. You can see from here, we went negative to a negative. That's still a big jump from a loss of 2 cents versus a loss of 14 cents. And now we're clearly making some money here. 118% growth, 125 to 14, solid acceleration. And then we can jump down and take a look at revenues. We don't have massive acceleration here, but the fact that we've got such solid high double-digit revenues behind those,
Not too bad.
Yeah, not too bad at all. That's the kind of sales or revenues you want to see behind earnings like that. Now let's go ahead and move on down to annual earnings, which we don't have on the page here, but Crowd has, we've got it listed. Crowd has seen a big pickup in their annual earnings over the last 3 years. And we'll see, since this was printed and now
we'll check it up later.
We'll take a look at it. But in any way, if you were to look at now, I believe in 2022, we're looking for about 55% growth, which is a huge estimate on top of all of those
existing numbers, right?
Exactly. So moving on down to institutional sponsorship, if you take a look, we'll see that it grew consecutively for the last 5 quarters. And more importantly, we've got a high quality owner in there. Fidelity's Contra Fund is a well-known one. They don't have a huge position in the stock, but it's a great start. We'd actually obviously love to see that list pick up a little more, and wouldn't be surprised to see it happen. There's been a huge pickup in sponsorship since the stock went public, and more than likely Contra Fund isn't done buying, and we'll continue to see that number grow as the stock continues higher, as it has been since this model book was printed. So in any event, just a quick summary on Crowd. We can see broke out through 59.50 on April 7th. Well, it was one day after the market, or the NASDAQ, followed through on April 6th, hit an all-time high, 227.39. It's higher now. But anyway, that was for 2020, a move of 282% in 34 weeks. So you can't really go wrong there. And we'll see, we're going to go upstairs here and then take a look at a chart. And one of the things that I'll point out right off the bat is, you'll notice with this and many of the others, and this one isn't, I'll just say this, that these stocks tend to mind their moving averages, which really makes for which is what makes them the leaders, really. So anyway, we'll get there. I'm getting a little off track here. Sorry about that.
Yeah, no problem. And why don't we start with the reaction during the March crash and how the relative strength line was performing, because definitely this kind of tipped you off that this could be a potential leader even before the market followed through.
Absolutely. So first thing we've got here, relative strength, new highs before price. This is when the market's in correction, you'll always hear us shouting, as you know, relative strength list. What's the strongest while the market's the weakest? And this was one that was clearly showing how strong it was while the market was selling off. So we've got the market up here selling off, and you can see right about the same as the market was bottoming. Relative strength line puts in a bottom, but you can see the relative strength line represented by our purple candlesticks here starts to move well above where it was or its highs prior. And if you take a look at the market here, you can see this relative strength line is turning and breaking its downtrend way ahead of the market. So that's what we're referring to. Basically, it's saying, hey, look at me, look how strong I am while the market's weak. And you can see this happens while the market is still putting in its bottom down here. Crowd is screaming, look at me, even while it's building its base. So
and looking at the price and volume action there on the decline, you can see that there are some above average volume spikes, but once it bottoms, look how powerful it is off the bottom here, both in terms of the price action. You've got big gap ups and also huge kind of blue skyscrapers in it. And as you point out, big blue, small pink, keep it as simple as it gets. That's exactly what you want to see when it's moving off the bottom and then when it starts to consolidate and tighten up before that first buy point.
Absolutely. So, by the time you've got the market following through on April 6th, and April 7th, where we've got our first entry area here, you can see, like you mentioned, volume did pick up on the way down, but it exploded on the way back up. The stock gets nice and tight. The averages are starting to turn up and converge to the upside, as we'll point out in many cases. It could be, in this case, not as tight, but you've got that same action going on here. And even so we've got the relative strength at new highs. You've got the volume clues coming up the right side. The market follows through. So as this stock finally starts to break above, it's this first area of significant resistance here. That's your perfect spot to put on a position. As we well know, when the market follows through, that's not an invitation to get crazy and buy a lot of stock. But when you've got, I would tell you this, when you've got a setup like this with fundamentals like this and a super liquid name, I will probably tend to, again, make it a little bigger than I should. But in this market, I would tell you that has probably created more problems for me than not, unless you're going to be proactive about selling that extra stock that you buy, which I've learned the hard way. It feels great on the way up, but if you're not proactive about it, you got to be careful when it's coming in and when the market's crazy. But anyway, I digress. So this stock gives you a couple of nice, easy entries right after the market follows through. We can see the volume is still coming in. As you pointed out, we've got walls of big, obvious spikes of upside volume here. When it's selling off, it's on below average volume.
And looking at the overall shape of the base, it's not a classic up and handle by any means, but I mean, you kind of have to take what the market gives you, and this was still a prime setup, and it gave you a couple opportunities to get in before eventually breaking that 67.56 pivot, which is kind of the intermediate all-time highs.
Absolutely. And it's exactly what you said. We've got a deep V-shaped formation here, but for those who are very familiar with the methodology, what a cup and handle looks like, this is far from a proper cup and handle, but it has those same general characteristics where we've consolidated and tightened up on lighter volume right above the moving averages, and the volume comes in. And while this is far from proper, that's why we choose to start working our way in here after the market follows through, as opposed to waiting for the breakout, the prior high that you just mentioned here. Fortunately, it's a liquid stock, so it acted well. It respected its moving averages. So even if you had, for whatever reason, not been confident about the follow through day, or maybe picked a couple of different stocks and didn't see crowd until it started breaking through highs, you still had plenty of time as it traded in and around that 67.56 prior high to get in the stock. And so you can see, if you read through the notes, you can see it basically acted extremely. So we've got the volume come in as it moves through the highs. We've got a buy here. This shakeout, we've got, unfortunately, this has been par for the course lately. The last couple of years of the market, I'd say volatility has been insane. However, we get it. I mean, look how perfectly that shakes out to basically its pivot point as well as the
200-day right there.
Right. That red line there is its 200-day moving average. So it stops dead on the money there. You also just happen to have, it looks like the confluence of its 10-day moving average there. You bounce, you close, in, well off of lows. I'd have to look to see if we're a little above or below mid-range, but at this point, you can see that's still a constructive end to that day after finding support at its 200-day and prior pivot. So, and again, let's say buying on weakness isn't your thing. You've got all of this, we see that it recovers, it starts to break out again. And again, this pullback and retest of its prior pivot.
Very normal action right
again, there. This is all normal, healthy action, and it's given you plenty of time to accumulate stock at still what I would consider an optimal risk reward point, even if you had missed on the follow through day. And sure enough, like many of these liquid, higher quality, and institutional quality stocks do, they will tend to respect their key moving averages. In this case, this is a nasty shakeout here.
Right.
And, sitting through these, honestly, I've gotten better with time. I think, we've probably discussed before, how do you handle this? Well,
right.
That's going to depend. It's going to depend. It's always a little bit personal, right? So it depends. What's your average price on the stock? How are you doing in your portfolio? Are you holding other software stocks? Is there a problem in the group? Or do you have good alpha in your portfolio at this time? Is this your only software stock and you've got other things holding you up? What is your position? So all of those things. So if you've got a solid average price and your alpha's on your side for the day, it's going to be much easier to sit through a shakeout like this. And let me back up a few. As far as sell stops go, we always at TraderLion we discuss that on there are some times where we will use a line in the sand moving average intraday as a stop but that in general, when you're looking at a report or we're always discussing obeying those stops on a closing basis, because in a strong bull market, you're going to see a lot of times at the very end of the day, unfortunately, it can be the last
10 minutes,
5 or 10 minutes that the market just rallies. You've got a powerful rally back, and the stocks that made you want to throw up all the day all of a sudden look fine.
Right.
So, and again, if you're so let's say you're super heavy software, you're on margin, you lost money the day before so maybe what you want to do is you want to throw up some of that stock or puke some of that stock. Maybe you want to sell some of that stock as it breaks the moving average. And what I'll do sometimes is I'll do that just to take the pressure off, let's say intraday, and then I'll watch that stock on the intraday chart for a potential, let's say, bottom the form like this, and I'll try and wiggle my way back in, and that's when I'll use extremely tight intraday stops, or I will wait for, if I sold it as it broke the 21.23, maybe I'll pay up and buy a few extra shares as it recovers that moving average, and then use that as my sell stop on an intraday basis. So in those, so there's many ways you can handle it. It just depends on your portfolio. Your personality, the size of your position, how much other software exposure do you have, yada, 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 that whole sort of thing. How are you doing in your account, your other stocks? Are you getting beat up on tech? Is technology getting beat up for the day, or is it just, is it just that particular group within the software sector? It's going to be different every time.
Right. And shortly after that, it looks like it gets a bit extended from its 10-day and short-term moving averages and starts a little bit of a basing period. But if you can actually look up at the relative strength line, it's actually outperforming the market during this time, because we were experiencing a short-term pullback. So this is very constructive action, and it actually never really forms a really sound base here, but it is some nice consolidation to give it time to rest from that strong move up from the March lows.
Absolutely. And I mean, you can see after the shakeout, I mean, you rip straight up to new highs. And this isn't really a breakout because there's not a, but as far as straight up off the bottom move from this shakeout at 71 to a move of 100, the fact that you know, rest and base build for a little while here is not surprising.
Right. And after that, within the space, it looks like it really respects the 50-day and also the 65 EMA at that last kind of swing low at 93.37. It's right at that 65 EMA. And then once again, it's off to the races and breaks out all-time highs in just a matter of a few weeks, it looks like.
Absolutely. Absolutely. It doesn't, again, it's one of those things where this isn't a legitimate or proper cup and handle. This is by no means proper double bottom in here. However, you get that same sort of thing where you've got the shakeout below the 60, you know, the shakeout and hammer and close back above, which also happens to undercut here and you know, more constructively all of this here. I would say this, I don't have one particular area in here that I would say, oh, it needs to undercut this as opposed to this. I would say that sitting in meeting after meeting with Bill, doing post analysis of charts, anytime he would see a shakeout of this nature, I know he was always looking left to see the significant, you know, what was undercut, if there was anything significant there. And, you know, whether it was the handle of a prior base or another, you know, I'm always looking for, was there something significant that we undercut here, whether it be a prior low, so, you know, something, that sort of thing. A lot of times that, to me, that makes the shakeout that much more significant. Why? Because I constantly heard Bill referring back to, oh, well, when it shook out like this, it undercut this area over here, which gave you, you know, which was another clue that we were bottoming here. Yeah. And let me tell you, he was never the guy that would try and scoop some stuff off the bottom and play the moving average game. He had no qualms about buying 500,000 shares of a stock at the market that was already up $15 for the day.
Right.
So amazing stuff.
And after this move off the 65 EMA, it's once again straight off the bottom, breaks through the kind of pseudo double bottom pivot at 116.18, it looks like, and then once again gets well ahead of itself and results in this another kind of base on base here. So walk us through this base and kind of what you see both in terms of price and volume action.
Absolutely. Oh, and there's that sign again. So I would point out here, even after this shakeout, I love this hammer candle back above the 65 day moving average here. A lot of times to me that will often signal, that's even worth taking a shot at as a buy at the close on a day like that. I would say this though, this is this action right here looks a little bit wedgy. If you go down and look at the volume here, it's well below average. So the fact that this breakout ultimately, and we can see, so you get a little bit wedgy, we finally break out, we get extended off the short-term moving averages in a hurry. And so it's not surprising that this ultimately reversed, came back in, tested and tightened up again.
Right.
I think if you, this has become a very common characteristic just with all the volatility lately. This one actually has been stronger in so much as it didn't have to re-break out. A lot of times you'll see them break out, come back in and try a second and a third time before they work. And so again, you see that same sort of, we come back into the logical support here and look what happens. You get immediate, you got that hammer close. And remember, for the folks, even though this was a down day, the fact that you close almost near the top of the range, this is a big accumulation day, especially with all of that volume. This is actually, same thing here. Actually, your only ugly day in terms of price is this. And if you look, even though volume was huge, it held up fairly well, and volume declined. So this, in general, the way that this came back in was all constructive. And then we tighten up again, not surprisingly, right along its 23-day moving average. So for those of us that like to buy tight areas in anticipation of, or right on a moving average, so we can use that as a tight intraday stop. You could have been buying the stock either as it pushed back up through the tight area or off of its moving average. Unfortunately, and this has been the case with many stocks as they've built bases in here. And if I remember correctly, when the stock was trading, I actually wound up getting shaken around in this base, you know, and eating up my my pretty average down here. And same thing could have happened to you in here. You see, you ultimately, even had you been buying and it looks super tight and constructive,
right?
I'm pretty sure I got shaken out of a few shares on this base too. But again, so we don't hold at 65-day moving average, but eventually we base build, we build a new base, and notice we recover our moving averages, and that, you know, pivot from back here, and all of a sudden we start to tighten up and respect our averages again.
Right.
Again, here we've kind of got this
wedging action.
So as we wedge into resistance, again, not surprising that we struggle and fail, even had we bought here, but we get saved by the stock's 23-day moving average, even though that would probably have that would have been painful to have to sit through, you know, on
especially right before earnings.
Right. Yeah, in such a short period of time. So a lot of time, and again, and I'm glad you pointed that out. That's what that gap is. So you've also got to, I'm not going to, so in a stock like this, I will often buy it with just 2 or 3 days left to earnings. However, it's got to be a stock with a little momentum behind it. I've got to see the group on fire. Maybe another stock or two in the group has reported, and, you know, so on and so forth. And I'll hope that the stock will trade higher into earnings and I can make a decision then. Sometimes I don't have and it can end in. So from there, while we're talking about it, I'll go to optionslam.com and check out
the implied move.
I want to see how much profit I have, and then decide from that point, am I going to hold? Am I going to hold it all? Am I going, you know, that sort of thing, depending on what my average price is. So in this particular case, you're getting stopped out before earnings for a loss. That's just what's happening here. So anyway, company reports earnings. If you were, and you know, even though you're very close to this 153.10, I never really count that as I'm never buying that stock on the open that day. Right. So as far as I'm concerned, after earnings, that stock just disappeared on me. I had to let it go at that point. Unless of course, you know, you still own stock at an average back here that you're still holding on to, there's no reason to sell into that earnings report.
Right. And after that earnings gap up, I mean, it's such a powerful stock. It holds that 10-day all the way up. And I mean, we end the year very strong, but it's continued up recently and acted pretty well given the market turbulence. So why don't we go ahead and open up MarketSmith and talk about where the stock currently is, and also take a look at the fund ownership.
Here we are now on to MarketSmith, where we can see our most current chart. This line here denotes the end of last year, 2020. And we can see since the stock's gone on to crank out a couple new all-time highs, but in general is really just been doing some base building here, which has overall been constructive. We went from new highs right after the beginning of the year. Even though we sold off, we held well above the stock's. This red line here is its 50-day moving average. Here you can see as we rally and tighten up back above its 21-day moving average, volume really tapers off and comes back in as the stock pushes to new highs. And what's significant about these last 2 days is you can't tell by looking at the price action here. However, the day before yesterday, the market was extremely volatile. Only the Dow closed higher, the NASDAQ, S&P, and Russell 2000 closed on lows. Stocks really struggled. So the fact that this stock closed well off its low and up for the day is outstanding. And then you can see yesterday, as the market shook around again, it found support at its short-term 10-day moving average, which also just happens to line up with, that
previous high right there.
This previous high, not to mention, you're looking at it's touching a lot of spots, right? There's that's very logical support right there. Maybe it shakes down to its 21-day before it's all over. And even again, so this is the thing you have to keep in mind here. If the stock came down and shook out below 200 today or next week, and then hammered back above the 50-day, that's ultimately extremely healthy for that base.
Right.
And I'm not saying that, so I'm always trying to keep in mind, that could happen, along trying to think worst case scenario, what could happen and what's going to is that going to break the stock, or is that ultimately going to be healthy for the stock? How many shares do I have? I'm always trying to assess risk along the way, but so far so good. This thing has done nothing except exhibit health and strength over the last couple of days based on price and volume.
Right. And looking around, you can see the estimates for 2022 up 55%, although the estimate revisions are down. And you can also see the excellent fund ownership over there, going from 229 funds in June 2019 to now 1,110. That's a huge jump in a very short amount of time.
Exactly. Right. We were discussing that. That's a huge jump. It probably continues. And my guess is Fidelity Contra Fund's position will continue to increase.
Absolutely. And all the way down to the quarterly earnings, you can also see the 4 quarters of margins, after tax margins acceleration. That's always good to see in conjunction with below out earnings and sales extremely consistent. So both on a fundamental and technical point of view, this is a very strong stock and definitely one that I'm looking to get back in. I got shook out. I bought the earnings gap up actually here, but I did get shaken out before this most recent move up to all-time highs.
Yep. I'm shaking back out of that stock as well. I haven't bought it back yet. So
right. So go ahead.
Yeah, I'm watching it closely. No, I was going to say, I think we've had it on the top 10 just recently. I'm watching it closely. So.
All right, I think that's a great place to end it. Thank you guys all for watching. If you did enjoy it, please go ahead and leave a like down below and subscribe if you are new to the channel. And Roz, thanks again for sharing your expertise. Let us know down below in the comments what we can do to kind of make these videos even more educational and beneficial to you all. And we'll see you guys in future videos.